Let's start with the actual commodity for a second, Michael. How much more upside is there to iron ore?
It depends a little bit on the timing of how long the operations will be offline indeed and the tons involved. But we're basically saying at the moment that given where you stand right now, given how much tons we see potentially off the market and how tough the Brazilian government is, I think above $100 per ton through the coming weeks is feasible.
So when you take a look, Edward, at where Vale is trading at, I mean, it's kind of right around your price target. Is Vale a value stock now or a value trap, considering we could see new regulation, for example, coming down the pike in Brazil?
I think it's a bit early to be making that sort of distinction. You know, there's still an awful lot of noise that we can probably expect in terms of headlines, discussions around what the fines and restitution costs will be. And I think the market's just going to be pretty cautious around Vale for the time being until we've got some more clarity on those two factors there.
Edward, how much does politics figure into it? This is Mr. Bolsonaro's really first big test as the head of the country. Doesn't he have to be pretty tough on this?
Look, I mean, it's a really interesting question. I'm not an expert in Brazilian politics by any stretch of the imagination, but you know, he was campaigning on a ticket of reducing legislation, a kind of pro-business mandate, and this is a test for him. Of course, he's been in hospital as well, so he's not actually holding the reins right now. If he's to follow up on what he was elected for, you know, you'd expect really things to become much more, I guess, liquid in terms of the business environment there. But how he reacts to this is still somewhat unknown. I'm sure that he's going to want to be taking fairly strong assertive action there.
Michael, part of the conversation is that Vale is going to be okay because they might produce less, but they're going to wind up making more for what they're producing because of iron ore prices. And part of that story is the really low inventory we saw in iron ore. If you come inside the Bloomberg, you can see nickel, iron ore, and copper inventories, in particular copper, just shrinking and shrinking. What is the other metal that is most exposed to even a tiny supply issue in the market?
I mean, if you're looking at it right now, I think the one where we've had the deepest deficit, that would certainly be nickel. And I think there was some concern that there may be a knock-on impact because Vale is also a big nickel producer, but I think that has so far been discounted. I think the other commodity clearly that is not affected really so far by anything that is happening in Brazil that you have to look out for is copper, because inventories are actually quite low in the market.
Michael, when you take a look at, say, potential new regulations or just the idea of needing to have transparency when it comes to getting rid of mine waste, for example, does that put stress on the global supply of any of these commodities, Michael?
I think the miners probably are much more cautious going forward, and I have a strong feeling that mining dams as such and tailings will remain a focus. But the industry has had an emphasis on actually cleaning up the environment, keeping the environment clean for quite a while. I think the issues that we have now seen in Brazil were just very unfortunate in so far as they relate to a particular type of dam that other countries, for instance, wouldn't have sanctioned for years.
So Edward, to some extent, this is a competition between Brazil and Australia. What is the chance that, in fact, this will have a longer-term effect in disadvantaging Brazil versus Australia as they have to really clamp down on the way they treat this mining sludge?
Look, I mean, I think it's quite possible we'll see a fair amount of disruption from this. I think it's also important to emphasise that there's really only around 88 dams in Brazil that are constructed using this upstream method, and most of those, particularly in the iron ore side of the industry, were no longer in use, and Vale's, for example, were in the process of being rehabilitated, including the one that failed. Managed correctly, these dams should fundamentally be safe, but the regulator's obviously going to be looking at things a lot more closely. And I think if we look at some of the news that came out last week, where one of the independent certifiers of the safety of these dams refused to endorse another of Vale's dams, we could see that sort of disruption where independent certification is withdrawn. Vale then needs to take preventative action, and that could have implications in terms of production.
So, Edward, I was talking to a hedge fund guy last week, and his favorite trade was you want to short Vale and then you want to go long Rio, BHP, and Glencore, their competitors. Is that the right kind of trade from where you sit, Edward?
Look, I think certainly Rio Tinto, you know, if we're looking at this from an iron ore perspective, Rio is a potential beneficiary of this for sure. Higher iron ore prices are good for them. They're the lowest cost producer in the world, and once you include shipping to China in your cost equations. And they've got a lot of other businesses that I think are very attractive. I'm a little bit more cautious on BHP, partially because of its oil exposure, and Glencore doesn't really have any meaningful iron ore production. It's an iron ore, it does trade iron ore, but they don't produce any.